What's up, guys? Welcome to your Bitcoin update. If you guys don't follow me on Twitter, make sure you do that. It's at CryptoSavvy1. There are some impersonators out there, but the real one is at CryptoSavvy1. Before we begin, take a second out, smash that thumbs up. It only takes a second, doesn't cost you anything. Let's get into the video. So obviously we've broken out of our wedge here. We've been talking about this for a while now. Could we go down to the mid to low 20s area? That is definitely a possibility. But I do expect that at some point we could come up and retest the bottom of this wedge. Now, depending on if, when, and where, this is a rising trend line. So we're keeping an eye on that. Right now, by looking at the EMAs, we are bearish here. We're still being rejected. We talked about this spot yesterday, about the 48.7, which is the 8 EMA. Until we get above that, looks like more downside is coming. We'll take a look at the smaller time frames also. We did point out yesterday, and actually a couple days ago, that we had this hidden bearish divergence right here, still playing out. Could we get another bump up, maybe test that 200 EMA around the 50,000 range? That's still a possibility. But like I said, today also we have the Fed chair talking. I think that's in a few hours. That may have some kind of effect. I think it's all pre-burnt into the markets personally, but some people do not. So whatever your choice there. I know a lot of people are talking about the hidden bullish divergence right here. We have a higher high in the price action, lower high in the RSI. That's kind of iffy as to where it's at. We'll see how this all closes in here. We'll take a look at the bigger time frames also. But as of right now, it is looking like more downside is a very good possibility. So anyways, let's take a look at some other stuff here. You guys know my big count. I do think this is a big ABC. We've been saying that since we called these waves back in March. Let me pull this up real quick. I'll just pull that ABC up. Actually, I'm going to throw these all in there. And guys, we're going to take a look at Litecoin, Ethereum, XRP, and the Dow. Take a little quick look at the DXY also. And first, I want to go through what I'm looking at here. So we looked at these 5 waves down, right? I remained bearish even after these 5 waves down and this continuation up. I was looking for an ABC correction, which I thought would end around the mid to upper 50s level. Obviously, we went higher, but we still got an ABC. This alone cannot be a finished correction. That's why I stayed bearish. Yes, we got an irregular correction. It did go higher, but the count in here is still in there. Let's take a look at it. So if you look at this as an ABC, you need 5 waves in A, 3 waves in B, 5 waves in C, and then you look for 5 waves down. But the 5 waves down could look a lot different than we were thinking, because we talked about the Amazon resemblance for the .com bubble, which I do believe we could be in the same sort of bubble as we were in the .com. And I'll explain a couple more things that I haven't been talking about with that. But you can see the 5 waves in A here, 3 waves in B, and then we have our 5 waves in C right there. That does make for an ABC correction, irregular correction because it went higher, but that was a stop hunt or a bull trap. They knew a lot of people were going to be buying once this broke, a lot of liquidity, and they dumped right into them, both highs here. So that altogether makes an ABC. Now, in the bullish case, we get a bounce around the mid to low 20s, in my opinion. Bearish case, we drop way below that, and we turn out to look a lot like the .com bubble, which we'll talk about in a second. But what I was looking for after this is a ABC, or I'm sorry, a 1, 2, 3, 4, 5 wave correction, which is still a possibility. Until we get enough data, we can't see exactly how that's going to play out, but there is a lot of resemblance in that Amazon chart we're going to look at here in a minute. This is the Amazon chart. As you can see, I've went over this plenty of times. Actually, if you go to my YouTube, the day I made the first video about it, we went through some measurements. But if this was to play out the same way, it would bottom out. If it played out Obviously, it's not going to play out exactly, but if it played out something like this, we'd be looking for a mid to end of 2023 for a bottom, and could be a full 10 years before we actually break this high again. Could be quicker than that. Obviously, the crypto markets move pretty quick, but the sentiment in the dot-com bubble was the exact same as the sentiment now. You had a lot of dot-com stuff. Everybody was getting rich, unrealized profit rich, by buying anything because everything was going up. But when it did come down, the how should I say it, the crap.com stuff, the altcoins, if you will, got totally washed out, and only the strong survived the end of the bear market in the dot-com bubble, and they did very, very well after that. We'll take a look at that in a second also, but it needed to get washed out. There was too many scams, too much crap, too many people just stealing others' money. And when that stuff got washed out, it went back into the market, into the real .com, real tech, and that stuff really took off. But we need that washout, in my opinion. Now, we have these trend lines drawn on here. If we were to come down like we did from the top and come down to this orange trend line here, which is off these two wicks, just like we did in that, that would get us down to approximately the $40,000 level. And then over here, and again, guys, these don't play out exact. This is just giving an idea of what may happen. So say we bounced off that 40K region. We came back up to retest the white trend line here, which, depending on if, when, and where, is going to be around the mid 50s range. That could have been the wave 1. And then the wave 2, or I'm sorry, that could have been the wave 2 in the Amazon bubble, coming up to that. Over here, it would be the mid 50s range, and then come down. Once this orange trend line broke here, that was pretty much verification that this bull run was absolutely over. So if that happens over here after the 55, possibly before, and we break this orange trend line, that bump up to the white trend line would be wave 2, and then wave 3 down here, 4, little tiny 4 wave, and then 5. And then we started another bull run. But this, like I said, took 2 years. So if that was to happen here, we could be looking at a 2-year bear market. Possibly. No guarantees here, guys. But if that was to happen, definitely look for, and if it measured out, just like these all measured out to approximately the same percentage points, rise and falls. Let's see, from the bottom of that A to the top of the C there. That was 178%. Let's just see what that was on here. It's 140%. So yeah, all this stuff is really close, guys. So if it was to go down that 95% like it did in the .com, like Amazon did in the .com bubble, we'd be looking at a sub 4,000, 35, maybe 3,800 Bitcoin. Not saying it has to go that low. Remember, that mid to low 20s range is a good area to get a bounce, because that is the measured move of that rising wedge that broke. But after this all happened, I have this circled in the next chart. You can see what happened after that. So in the long term, some cryptos could be extremely bullish, but I do think we're going to have a washout first. Let's take a look at, these are the gaps, guys. I've went over this in the last few videos. I'm not going to go over that again. We're going to get into the smaller time frames. But first, I want to let you guys know, if you're not trading on Primexpt, I definitely suggest at least trying it. I have a link down below in the description. You'll notice there's not a bunch of Bybit links and all that, because I believe them are scam exchanges. These guys do not trade against you, and they have a contest section up here that's totally free. So you can totally play non-risk and learn this platform just by going in the contest, and you can actually win tradable money from these contests without putting any risk into it. So definitely check it out. It doesn't cost you anything. It's worth a try. Get used to the platform. You can trade crypto, forex, gold, silver, oil, S&P, Dow Jones, everything all on one exchange. And you can have multiple exchanges you can have multiple trades in, longs and shorts at the same time. So if you're in a long-term long and you want to make some short positions in there, You can do that without it clumping them all together. Just a way better platform, guys. Definitely check it out. And you can use my promo code if you are trading, Savvy25, that gets you 25% off your fees. I will have some new promo codes next week with some major benefits, so keep an eye on out for that. There is a tutorial on my YouTube page right here, Primexpt BT tutorial. It'll teach you kind of how to use the margin or how to adjust your margin on there. Definitely worth a watch, and it tells you where to put promo codes. I'm gonna take a look at this real quick one more time before we get into the smaller time frame. This is obviously the macro chart with the parabolic arcs here. Every time we break that, we go into a bear market. We broke this one over here, bear market, and we've broken this one over here. Also, we have the fib channels in here, and we talked about this quite a bit. We lost this channel here, so last time we lost it, but we did have the arc to jump off of. We pulled back up over it. If we do come back down to the next fib like we usually do in these, that price would be somewhere, depending on how long it would take to get there, in the $30,000 range. If it was to drop down to the next one, we would be in the sub 20 range, and after that gets you down into the sub 10,000 range, and then it gets really ugly after that. But we'll keep an eye on it, and I've talked about this plenty of times before, that it is a very good possibility that we could be in a 10-year market cycle now for Bitcoin instead of the 4-year. I know everybody is you know, really pushing towards the 4-year cycle, but in reality, now they're saying that instead of December all-time high, it's gonna be next year. So they're talking about changing it to a 5-year, but they won't accept a 10-year. I don't know. You figure that out for yourselves. Let me know what you think. I did do real quick before we go into the smaller time frames. I did a little poll here, bear market or bull market, had 199 votes. And we only have 114 likes, guys. Take a second out, smash that like button. If you are using your mobile, all you have to do is exit the chat for a minute, hit the like, and you can get right back in the chat. If you're watching on Google TV or any of that, in the left bottom hand corner, there is a more options. You can go there and hit your like button. I appreciate that, guys. It doesn't cost you a thing, and it really helps the channel get out there. Hit 1 in the chat if you've hit the like. Hit 2 if you're not gonna. See how many rude people we got in here. All right, let's get on with it and get into the smaller time frame. All right, so this, let's put the, we've been talking about this for quite a while in the last few days, this trend line here, and we have been playing on it, bouncing on and off it, through it. It's around the 47,153, exactly where we're at right now. If we keep getting rejected here, you guys know my next targets are around the 45.4. Most likely get another bounce there, maybe come back up into this range. If we do break above and get above this 55 EMA, then we could go up to the mid 50s that we were talking about. But otherwise, if this 50 or 45.4 breaks, my next target's around the 42.2. If that was to break, and guys, I don't think it's going to drop straight through, which is possible. Just keep an eye on it, be careful. But if 42.2 was to break, I'd look for 40,000. After 40,000, 35,000. These would all be places I'd be looking for a bounce. And usually if it breaks through one, it'll bounce back up to the other one, confirm that it's resistance, come back down, could even bounce up a couple times. And then once the next one breaks, it'll usually come down to my next target, then come back up, retest the old support, so on and so forth. You guys get it. And if you guys followed me on Twitter yesterday morning, I put this triangle in there. We were about right here and said we would most likely be retesting the bottom of this triangle and get rejected on the 4-hour RSI. And you can see that's exactly what happened. We are creating a little hidden bullish divergence here. Let me zoom in so you can see that. We're making a lower low on the price action, a higher low on the RSI, but we do have 2 hours for this candle to finish, so it could still drop back down and get below that. If not, it does look like it's just forming a little head and shoulders on the RSI anyway, so it does look like more downside. you guys haven't checked out my wife's webpage, inkyourimage.com, definitely check it out. She has a crypto section. She can literally put anything you want on any of this stuff. It's quality stuff too, guys, not garbage. Definitely check it out. It helps support the channel. And looking at the Dow, this is the Dow on the weekly. You can see this is from the .com bubble back in 99 and 2000. You can see what happened to the Dow. And if you look right here, you can see in 1998, we had a big drop here, just like we had the big drop over here in 2020. And you can see we had a little one first, then we had the bigger one, and then continued up. Little one first, then we had the bigger one. Looks a lot like a fractal to me. Same type stuff going on, guys. Now, although the Dow doesn't look like it did that bad, it did get back down into the, over here, it would be somewhere around the 22,000 point range, right in this range, if it did the same thing it did over here. But remember, this is weeks. This took a long time. This took like 4 years for it to bottom over here. And actually, let's get to the bottom. That was a 38%. Yep, same thing as over here. So you may see the same thing. Like I said, it may take a couple of years, measure up with the bubble bottom if that does play out. And again, guys, I'm not saying it's guaranteed to play out, but it's looking pretty convincing on the charts. Even the RSI on the weekly matches up beautifully. We zoom in here and just look at what's going on. Same stuff. This started it off with the bearish divergence, just like we got here. A lot of it looks really close. And let's take a look at the DXY. The XY is bullish. We were watching this triangle here. We do have targets up here between the 97 and 98. I do believe it's headed there. I've been bullish on the dollar since way back here, and everybody called me crazy. But if you understand how markets work, it makes a lot of sense. Gold, still bearish on gold. You guys know my targets. These are old charts I'm showing. My first target's going to be, and this could take time too, years maybe. 1600 if that breaks, 15. And then if that breaks, we'll talk about that. But as this plays out, then we'll keep an eye on it. But this would make for a big ABC correction. Silver, same thing. These are old charts, guys. You can look back at my videos 6 months ago, and these charts were the same. Still looking for $20 if that breaks, 15. Ethereum. Now this matches up with Bitcoin having further downside to go. We talked about this yesterday. I'm going to zoom in. We had this drawn out on the RSI a while back. We had a rising channel, came out of it, bounced back, tested for resistance, got rejected, and continuing down. Now let's get that out of the way and take a look. This is a rising wedge. Right here, we broke. And if you'll notice, if you watched yesterday's video, we put this target in 39.26. We didn't quite hit it, pretty damn close, which is the bottom of the wedge, and continue down. Our next target is going to be around, actually, it's going to be a little bit lower, around that 3,400. If that breaks, we're looking for 32.25. Should get a bounce around there. Once that does break, though, then we're looking around 18.50. And if we do go into multi-year bear market, we could see as low as a $200 to $400 Ethereum. It's possible. If you don't think so, talk to me in a couple of years. We'll see where we're at. And Litecoin, same thing. Litecoin broke through the rising broadening wedge. My next target for Litecoin's around 106. If that does not hold, we're looking for the same low bottoms we had in the last bear market, although that could take a few years. But that's what I'm looking at. Same thing I've been looking at for a while. We've got major sell signals all over the place. XRP, taking a look at XRP, we are, again, getting support. Once we break this support, and we can move this up a little bit now, around that 76-cent range. Once we break that, we're looking for the old lows again around the 20-cent range. We'll see how that happens, how it plays out. If we do continue the bounce here, our next resistance level for XRP is going to be up in the 90-cent range if we continue to bounce from here. But remember, if we lose this 76, it's pretty bad. I think that is about it. Other than, let's take a look at, this is the 3-month candles. This is looking like a pretty ugly candle here. We do have half a month left for it, but this would be the, show you real quick. So you could count 5 waves on each one of these waves. This being wave 1, this is the macro 3-month chart. This being wave 2, this being wave 3, this being wave 4, this being wave 5, done. And yes, there is 1, 2, 3, 4, 5 waves. We just barely broke wave 4 of the wave 5 here. So that also shows that it could be going much further down. People say it won't break the last high of 20,000, which is possible. I'm not saying that's not possible, but if this count is right, it could come back down as long as it doesn't break the 1 wave. Still fits the Elliott wave theory, guys. I know a lot of people don't understand the Elliott wave theory. They think, for some reason, people think 3 wave has to be the longest. That is absolutely 100% untrue. 3 wave is often the longest, never the shortest. So 3 wave, as long as it's longer than 1 or 5, is fine. But if it's shorter than 1 and 5, then you got the wrong count. But this here is a valid count. So keep a close eye on it, guys. There are no guarantees in any market. And if anybody is guaranteeing you anything, just like people were guaranteeing 100,000 by the end of the year, you're nuts to believe anyone. Anything can happen in any market. Absolutely nobody knows what's going to happen. That's why I never tell you when to buy. I never tell you when to short. I never tell you when to sell. I never tell you when to long. All I do is tell you what I'm doing and what I'm seeing in the markets. And hopefully that'll help you to understand markets a little better, because a lot of people out there really don't seem to understand markets. Smash those likes. Let's see what's going on in the chat. Oh. Anyways, Savvy is a bull that sold. I got to put this shit straight too. That sold early. I did sell early. And you know what? I sold at a profit. And you know what? If I would have held that and not traded, I wouldn't have made shit compared to what I made. I made so much money trading that. I've actually become a millionaire this year. Have you? And another thing about a lot of these YouTubers out there, and especially the ones that talk shit. I don't like to sit and talk shit and call people names, but there is some YouTubers out there that talk absolute garbage. They don't trade. They don't know how to trade. Especially the clowns, and you guys know who I'm talking about. But the one Jordan, I want to challenge him to a public trading competition. Let's see if he can even trade, which I highly doubt he even does trade. He's just about Bybit commission, which is a garbage exchange that people push and make a shitload of money off of. Anyways, I wanted to throw that out there. Love you guys a lot. Make sure you smash that thumbs up. Subscribe if you haven't already. If you want real, true content that actually has some understanding of the market. I don't just get on every day and tell you what the market has done. We look for what the market's going to do. Love you guys. Take it easy. Have a great one.